Hey, welcome to the Everyday Investor podcast. Today I'm catching up with Paul Quickenden, Chief Commercial Officer at Easy Crypto. The Bitcoin Exchange Traded Fund, or ETF, was an amazing success. We saw it launched earlier this year, and recently we saw the approval of the Ethereum ETF. Bitcoin and Ethereum are two very different assets in the digital ecosystem, however. So today we're going to be unpacking that. We're also going to be touching on some of the political interference that may have led to the approval of the Ethereum ETF and where that eventually all goes. And lastly, we're going to be finishing up around a discussion about what happens if we are in a bull market with crypto, but we're heading directly into what could be a global recession. Hope you enjoy this one. Subscribe if you're on YouTube. Make sure that if you are new to crypto, do your research before you get involved. Sign up to Easy Crypto using the referral code in the show notes. Let's get started. How are you, Paul?
I'm really good. Thanks for having me, Darcy. It's good to see you
Yeah, it's been ages.
again.
Yeah, a little bit of an inside joke there. We caught up last week, but unfortunately, I didn't hit record. So we're having another crack at this. Good news is we've practiced what we're talking about a little bit. If we can remember it, we'll try and pull up because it was an awesome discussion. Unfortunately, yeah, you have to turn on the sound occasionally. So last time we caught up, we were talking about the Bitcoin ETF. That was in April, I think it was, and there was probably a lot of hype around that, a lot of anticipation. There's a lot of price action with Bitcoin as a result, maybe, or independent of that. And now we're going through it again, but this time with number two, with Ethereum. So I want to
Right.
unravel that, see what that means. But before we get into that part of the discussion, I want to break down three groups of people and just unwrap their psychosis or unwrap their headspace, starting with hardcore Bitcoin maximalist. How would you describe a Bitcoin maxi, Paul?
In crypto, there's kind of tribes or people who are really passionate about particular technologies and coins and projects. And maximalism is kind of the extreme version of that, I guess, is how I view it. And so Bitcoin maxis, as they're kind of colloquially called, are very, obviously very pro Bitcoin, probably to the detriment of the rest of the ecosystem. They're kind of not really clear why you need other chains, coins, all that sort of stuff. They've really bought into the original vision from the Satoshi white paper, and ultrasound non-inflationary money is the way forward, and so that's their big play. So that's the signs to watch for on a Bitcoin mixie, I guess, is how I would describe it.
So like a digital version of a gold bug, right? Like they kind of understand
Yeah.
the what happened in 1971 story. And I think it's really good, like when you are investing in anything, whether it's traditional assets or in the crypto sphere, to fully get the maximalist vision, right? Because if you are an extremist yourself when it comes to what you're investing in, then you can zoom out and still be open-minded about all the tools that you're using to build wealth. But it's really good just to crawl in these headspaces so that you really get it. And number two, Bitcoin, Ethereum. I've heard this
hmm
described as a basically a software platform. Um, how would you describe Ethereum, or more specifically, how would you describe the Ethereum maximalist?
Ethereum itself is the number two token by market cap. And I think you're right. It does act a little bit more like a platform, so a little bit more like an Amazon web service type play. So its big innovation was bringing smart contracts and the ability to interact with the chain to the mass market, and so it does act a lot more like a platform as a service. Um, it has its own form of maximalism. There are people who in the Ethereum community seem to hate on Bitcoin quite a lot. Hope for something called the flippening, which is when Ethereum is market cap is worth more than Bitcoin's. Kind of look down on Bitcoin as a Gen 1 technology that's not very, very smart, not very clever. And my view is that the tribalism has got us where we've gotten to. Like the people that are so passionate that they've stuck with the ecosystem, the projects for 10, 12 years. In Bitcoin's case, that was an absolute necessity. I'm quite grateful for them and the passion they bring, but it is kind of sometimes a
Yeah.
little bit laughable how they kind of go at each other, I guess, because you could
Yeah.
argue that they're all on the same team, but sometimes they definitely don't see it that way.
No, no, I think when you come at it from an outsider's perspective, like a mainstream everyday investor type perspective, when you're looking at crypto, it kind of feels like it's all the same thing. It's all in this one category. But when you look closer, no, there are very, very distinct camps. And
Yeah.
I think I was watching a video just listening to Vitalik Buterin, who is the founder of Ethereum, and he's an interesting sort of vibe about him, right? With his like skinny arms and stuff. Like it's quite an interesting character, and I just wonder
Yeah.
if if it wasn't for these really interesting backstories, like how this mysterious Satoshi Nakamoto, it's this Promethean gift that came from on high from the blockchain universe. Here's this gift of sound money, Ethereum. It's more like, hey, we've got this guy who's clearly got a gift for mathematics and he's invented something. But one is more like a gift, one is more like brute force. We're going to make it better. Um, Everything has its place, right?
It does. And, like, again, I think that just adds to the mystique of the sector, right? So, at least we know who Vitalik is.
That's right.
And he's certainly got a big mind on him. And if you ever have the chance to read some of his blog posts, like you need time to digest it. They are deep thinking going on. Yeah. So,
Wow. So I want to also then talk about Solana. So I've had a little bit more to
mhm.
do with Solana in the last few months. Solana, I guess, for those that are listening, it's like Ethereum, sort of, in that it is supposed to do some of the things that Ethereum does, but faster and cheaper. That's my understanding.
Yeah, so Solana is another layer one chain, just like Ethereum and Bitcoin is. Ethereum, while if objectively you can look back and see there's some really big technical improvements on the original concept of a blockchain, it does have a few drawbacks, and one of those is throughput, and the other one is cost. That's a function of decentralization, so it's a very decentralized network, but it's also a function of the reward mechanism to keep everyone running those nodes and staking those nodes and all that sort of stuff. So Solana is a very different technology stack. It's not written in Solidity, just like it's written in code that's much more familiar to more everyday investors, but it's quite centralized. There's not, and it has had its issues because of that.
Yeah.
And but the transactions per second are really high and the fees are really low. So it has a particular niche. And at the moment, people who are into meme coins, into launching, something with hat or whatever it is, preferring Solana as a launch venue over Ethereum, for instance. At face value, they look kind of the same. Like you can launch tokens and move tokens and sell tokens and all that sort of stuff on both networks, but they do operate a little bit differently. Sometimes you're going to need different wallets to be able to work with those, particular chains because they're just quite, again, the underlying technology is quite different.
And I was talking to somebody about this a while back, and he was just saying that we're at a very early stage still when we're thinking about these types of assets, or really it's technology. And he was saying that in the future, it might be kind of like you're going to use this crypto for these types of transactions, and you're going to use this crypto for those types of transactions. So it seems like Bitcoin, that's the ultimate store of wealth. Ethereum, maybe that's a world supercomputer of some sort, but maybe specific to, say, financial transactions or other types of things. And then Solana would be specializing in a certain niche, which at the moment they're still trying to find their place and the market's growing all around
Yeah.
it. So do you kind of see that in the future we're going to have different forms of money for different things that we do on chain?
So I think that's a solid piece of thinking. I think even this week, Shopify and the Salana ecosystem have got quite close. Announcing a better integration. Stablecoin volume on Solana is going gangbusters because low fees, fast throughput. All of the again, like I just view it as an evolutionary step, and you're quite right. They've just got very different characteristics and patterns to them, and so
Yeah.
if in your portfolio you want digital gold, you want access to a platform as a service, an AWS or a Google or a Microsoft, it's the Ethereum. And then if you want a really big payment tech or a fast throughput network for, I don't know, the internet or whatever, it could be Solana, right? And so they just represent different value propositions and offer us as users very different things. And so I don't think having a maximalist mindset should preclude you from seeing the benefits of all of those ecosystems and potentially diving in for different things. Yeah.
Now, at the time of recording, we probably should have said this at the start, but right, I think it's really important. It's kind of like those Star Trek episodes where Captain Kirk used to start every episode saying star date 2142. We're entering the blah, blah, blah system. So Bitcoin at this time of recording is just under $67,000 US. Ethereum is just over 3,500 US. Solana, um, around about that 150 US per coin. And when
Yeah.
we were talking about the Bitcoin ETF, it was interesting because it almost like it was initiating a bull market in Bitcoin a little bit sooner than what most people might have anticipated, I wonder. And so I just want to pick your brains a little bit around the price action. What did we learn about the Bitcoin ETF as it relates to the actual Bitcoin price?
It does seem to be that when we see significant inflows into the ETFs, the prices start moving upwards, and so there is a reoccurring pattern there. And the Bitcoin ETFs have been wildly successful in terms of ETFs. Like there are people, ETF analysts who track this stuff, and it's the fastest to $10 billion that did it in 47 days. The next fastest was 647 days, literally 600 days before. We're maybe 5-6 months into the ETFs, and we got 50-60 billion, depends on the price, under management. A good ETF does 100 million in its first year. So
Yeah.
so we're like, the scale of their success is really hard to get your head around. So they've been very successful. They have had outflow weeks and days, and and when that's happened, we've seen demand slacken off in the markets. And what seems to be going on, and again, there are people who look at this stuff, but traditional retail investors are still hanging on to their bitcoins. The hodl wave is showing that people who have owned coins longer than 6 months is really high, kind of maybe even at all-time highs. I haven't checked that recently. There are some people who got in at all-time highs, 74, 72, who have what we call soft hands. They got out when it went down. That's the thing. But again, in terms of price action, as the demand comes from the more institutional market, the prices are kind of recovering. But we've been range bound now for since probably March in Bitcoin speak. Moving between 65 and 70 something is a pretty unvolatile period in Bitcoin's history. And I know those are fairly decent moves, sort of in the 10% range, but actually to bounce
Mm.
around like that for as long as we're doing is kind of a little bit abnormal for Bitcoin.
And you mentioned the volatility word, so the movement
Yeah.
in price around its average price. And so that volatility and those next stage adopters, well, they're probably a new form of retail that are really encouraged by this exchange traded fund wrapper that now holds
Mm-hmm.
their Bitcoin. Do you feel like the volatility piece will kind of subside, or do you think that there's even a risk the volatility could get worse because we have a new generation of what you would call soft hands? I'll call them lettuce hands who haven't yet experienced the scariness of what happens in this market.
Oh, look, I think it's all on the table, Darcy. I think you're probably going to see all of that. My hope is that the people who get in are wise enough to realize that it's a long-term play. It's not, day trading. Bitcoin's a very challenging thing to do. I think it's all there. I think there's filings for the Bitcoin called 13Fs, so we kind of now have an insight into who the owners are. And they're not the Goliaths, but there's certainly a lot of institutional interest in there, and you would hope they're a bit more rational. But again, I suspect they're going to be very profit driven, and so if they start to see the
Sure.
macro moves, they're going to be adding to the fire sales. So I think we'll see both. I think ironically, the relative stability of Bitcoin is kind of evened off its demand. Like if it was going one way or the other, we would see more action. I think at the extremes of the pendulum swings, it'll be more extreme. I guess is my observation. We're not seeing the retail fear of missing out FOMO right now. Like you know the the last time I saw you on Friday, the Uber driver wasn't talking to me about Bitcoin yet. Even though I'm wearing an Easy Crypto T-shirt and all that sort of stuff. That
Yeah.
hasn't happened yet, and so that suggests we're still a little bit early in the bull part of the cycle. And I think it's
Yeah.
Raoul Paul says we're in spring. Is it? Is that his? He's
I
using a
think so. Yeah.
seasonal
Yeah.
metaphor, isn't it? Yeah, yeah. So
Yeah.
and that feels probably about right. Like we're out of the winter, but we're certainly not in the full summer yet.
Yeah, which speaks to the strength of the summer to come, perhaps, right? Like if it's this warm already, right? That's the idea.
Yeah, well,
Okay, so let's get onto this Ethereum ETF. So the SEC approved what's called oh man, I think it's called a 19B or something like that. Correct me if I'm
yeah,
wrong. But it's the first stage of an approval, and if you can imagine, two things need to happen. They need to give the green light, which they have, but then they need to approve the specific issuers or the specific funds themselves, which we're not there yet. But this is a
yeah,
spot ETF, exchange traded fund that will hold
yeah.
Ethereum.
Hmm.
My curiosity is that the Bitcoin ETF makes a lot of sense because it's just a traditional finance wrapper around this digital gold, and Bitcoin, in my mind, is meant to be held. It's a long term play, and therefore, whatever helps you to hold it longer, it's great. And if you can add it to an ETF, it means it can be integrated into traditional finance products everywhere. But with Ethereum, to me, it feels like that's an asset that should be free. It should be used. It should be used to build stuff. It should be consumed. And so, I have this kind of mental brain lock here around the use case for an Ethereum ETF. Is my line of thinking a little bit old fashioned or outdated here? And
Well,
be honest. Like,
no, I think it's
is there
pretty
truth about
reasonable
this?
questions. Yeah,
Yeah,
look, I think it's really reasonable question. So, Ethereum has more utility. It's the gas token, the token you pay for network fees on when you're moving coins around on the Ethereum network. And it has also this staking component, which is how they have a proof of stake security model on Ethereum, which means you put forward and lock up 32 ETH, which is a lot of money. Don't get me wrong, but you lock up 32 ETH, and you then kind of have voting rights on the blocks, and you get rewarded for participating, and the yield is somewhere between 3% and 4% on that. With the ETFs, you have to forfeit that in the US. There are ETFs, I think, in Hong Kong where you can get the staking yields, but the SEC seems to be deeply uncomfortable with that aspect of Ethereum. Gary Gensler still won't confirm that Ethereum's not a commodity. So I think the staking part is
security.
the bit
Yeah,
that looks like a security to them,
yeah.
and so the ETFs we know the ETFs have been asked to rewrite their whatever the right term is, their PDSs or whatever it is to exclude staking. And so I think you're right in that when they do come to the market, there's a wider array of consideration for people who are going to participate in that. At the top line, yes, it's the second biggest crypto, and while it's correlated to Bitcoin, it's not perfectly correlated. And for instance, the 2021 bull market was led by Ethereum, and Bitcoin followed. And so there's different trends there that can happen, and they offer arbitrage, or they offer ways of recycling capital gains into assets at different time, timing the market type stuff.
So in terms of like the amount of share of this new inflow that might be going towards the crypto market, how much of that roughly do you think might go to Ethereum versus Bitcoin?
The ETF analysts that I was referring to before have done some estimations, and they think that Ethereum will kind of be about 20% of the inflows that Bitcoin's seeing. And so if Bitcoin's at 50, 60 billion, depending on the price, then we're talking sort of 10, 12 billion.
Yeah,
At 3,500 per coin, now you can do the numbers.
yeah.
Um, it'll be a big chunk, but it's not going to be quite as profound as kind of the gut feel. Yeah,
Yeah. And you mentioned the word, I think you mentioned this word supply, or
yeah,
maybe not. I'm going to mention the word supply. So, oh no,
right.
you were talking before about yield and staking,
Yep.
and
Mm-hmm.
so proof of stake, proof of work, which is what Bitcoin is. With Ethereum, it's not necessarily finite supply. They have some really interesting tokenomics, I guess you'd call it. Bitcoin is fixed finite supply, and so
Yeah.
when it comes to this difference between the supply of new assets within this chain, so with Bitcoin and Ethereum, how does that affect the ETF price going forward, do you think? Because they can still create new Ethereum. And so does that mean that
Yeah.
we're not going to see the same growth rate over time?
It's a fairly complicated space. So Bitcoin has software coded that only ever be 21 million. Ethereum doesn't have that, but it does have this mechanism called a burn. And so when the network gets quite busy, Ethereum is taken out of supply. And that happened at a thing called the merge, which was maybe a year and a half ago now. I think
Yeah.
April last year.
Yeah.
And since that time, Ethereum has been deflationary, in a small percent, but it has been deflationary. And effectively, the busier the network, the more it burns. But that's unpredictable because how busy the network is depends on where we are in the cycle and demand, and and so that's a very hard thing to forward forecast, I guess. But it has, in the last year and a half, it has burnt more Ethereum than have been issued to the market. Last time I looked, there's a really good website called Ultrasound Money, which is obviously written by some maxis, but it captures that stuff on a daily basis. That burn mechanism does seem to be delivering. That the supply is definitely not increasing like it used to before the merge happened. The bet is on that the platform as a service that is Ethereum will be more utilized by layer twos and DeFi stuff and all that sort of thing over time. And so more utilization equals more burn, and more burn equals reduced supply. That's their token economics and their view of the world. But it's a little bit more complicated than Bitcoin. So again, this is why the analysts are going, it's a slightly different proposition. You need to do a little bit more thinking about Ethereum and what it means. It's not quite as simple or black and white, I guess, is the way I would view it as Bitcoin.
It sounds like it. So it sounds like the more people hodl or take supply out from Bitcoin, that's kind of like the whole idea. Whereas the more you use it with Ethereum, that's the whole idea. So one is hang on, one is let go. Very different sort of mental wrappers. Okay. So going back to the approval of this, a lot of people were taken off guard, myself very much included. I did not expect to see an Ethereum exchange traded fund approved at all. I was even surprised, to be honest, with the Bitcoin ETF being approved, because I was kind of looking at the political overlords and just what they were saying. And we had this massive U-turn in the last 1 month, maybe because the old Donald Trump came out and now he's pro crypto. All of a sudden, the other side is pro crypto. How much of a political issue was it in terms of this approval? Do you think that the politics were a main driver behind all this?
Like, we really don't know, but we're guessing that politics was a big driver. The reality is that politics is a game of not, keeping your friends happy and trying not to offend too many people in the middle who aren't quite, swing voters. And when you've got a population like the US where you've got 30-40% who have or have held crypto, taking a definitive anti-crypto stance seemed to be hurting the Democratic Party, I guess. And they've been very, there's been an anti-crypto army led by Elizabeth Warren, and there's people who certainly are of the opinion that Gary Gensler has been aiming for politics as a career, and reading the tea leaves of the room, which was take an anti-crypto stance and all that sort of stuff. But the rapidity, like how fast it changed, like the analysts went from, it was a Monday morning like 3 weeks ago, analysts went from having a 10 to 15% chance that the ETF would get through that S19 approval to like, holy heck, it's going to happen today. Like, it happened that quickly. They are pointing towards politics, and the Biden administration has openly said, we're going to be, we don't like some parts of crypto, but we're going to be, you can donate to us now in crypto, just like with Donald Trump and the Republicans. So, it certainly does seem to have become much more of a topic of conversation. And, there's an independent candidate, one of the Kennedys running, and he's very pro Bitcoin. And so it is a thing. I tried desperately hard not to get involved in other countries' politics because it's hard enough to understand our own, but it does look like it's become quite political in the US. Yeah.
And if it wasn't the United States, it probably wouldn't be a big deal, to be honest. As we've seen with some countries basically going holus bolus into Bitcoin, it has an impact for sure, definitely in sentiment. But when it's the
Yeah.
US and they effectively are masters and commanders of the global reserve currency to a certain extent, and that's being challenged as it always will be and always is. But my thinking was that the reason why they were probably against other forms of currency full stop, like especially decentralized forms, was that they would lose control or lose financial sovereignty. And that seems to be maybe part, I don't know, maybe that's going to be part of the strategy going forward in a BRICS world where there's a competing global reserve currency block potentially. Maybe crypto is the US, maybe it's their best friend. I don't know. Do you have any thoughts on that?
Yeah, look, it's a deep question, Darcy. I'll be honest, I don't know if the BRICS nations are the reason, but it seems like they are a reason for the US in particular start considering decentralized currencies as a in a more favorable light.
Mm,
We do know that the blockchains are incredibly transparent, and while the end users are anonymous, like once you've done the KYC on the exchanges, like you can be de-anonymized really quickly. So as a crime fighting tool, they're pretty powerful. Once the law enforcement agencies kind of get their head around that, and we are seeing that change, the very dated view that crypto is only for criminals kind of falls away really quickly. The ability to watch where the criminals are sending their money is quite an enlightening experience, I would imagine, versus cash, which is completely anonymous. So look, it's a long way of saying, look, I think it's definitely part of it. I also think it might be just a little bit more prosaic. Like it's literally 30% of the population are getting a bit offended by your anti-crypto stance. Do you want to do that and go into an election in November?
yeah.
They have pollsters. They will have identified what the issues, and particularly in that swing vote category, what are affecting people. And I work in the industry, so the views I see are definitive. Like there are a lot of people saying I'm a single issue voting entity. Are you into crypto or not? And so it was really stark there for a long time, and now it's not. And so by
Yeah.
kind of removing that, I guess the ability for the Democratic Party to kind of capitalize on or recapitalize, depending on
Yeah.
your lens, is there, right? So, I often think we ascribe too much intellect to some people's, or institutions' actions. I think they're just a lot simpler than they are. We made a mistake. The research is telling us people hate the stance that we're making, and we're moving to rectify that mistake because, elections are popularity contests. That's what they are.
No, it's really that simple, isn't it? And
Yeah.
the reasons are different every time. So we seem to get the same pattern with a lot of things, but the reasons are different. And so what I'm referring to
Yeah.
is this tension, I guess, between fundamental analysis and technical analysis, or looking at cycles and patterns, reading tea leaves. Sometimes you can clearly see things that are almost independent and predictive of the fundamentals that seem to occur afterwards. It's spooky how there's that relationship. And you mentioned
Yeah.
Raoul Paul before with his, I guess, butchering it, right? But it's the four seasons model where
Yeah.
there's crypto winter or crypto fall, crypto winter, crypto spring, crypto summer. And we're potentially in some, spring or late spring, maybe bordering on summer. And it seems to follow that since 2008. And it seems
Yeah.
so far anyway, like it's no different this time around. So to kind of speculate a little bit, and obviously we're not experts, no one knows, there's tons of models out there and they're always wrong. Sometimes they're right, but it's probably just by chance, so we don't want to put anybody on the spot here. But what do you think is going to happen, say this time 12 months from now, so this time next year, when we're having this conversation around, say, Bitcoin, ETH, and Solana? What do you think we're going to be looking at in terms of the price ranges?
Okay, so I'm not an analyst, but I do read the analysts speak. So that's the caveat. Um, Bitcoin has operated on the last four cycles in a very repeatable 4-year cycle, and we don't see any deviation from that at the moment. In fact, we're slightly ahead of where we have been in previous cycles in terms of price. With that lens on, the best analysts, and they're technical, they're not fundamental, but the best analysts seem to be consistently saying 200,000 Bitcoin by around September 25. There are people a little bit lower than that. There are people who are double that, sort of 400,000. Ethereum, it's got a kind of a $8,000 to $10,000 number often attached to it in this bull cycle. Salana is a younger asset, so it's probably more subject to volatility, and so the
Mm,
upside potential of Salana is a bit higher. And so people are sort of saying $1,000, $1,500, maybe even some really crazy numbers like 3,000 for Salana, right? Which would be huge but it did it last cycle. So it's another one of those kind of assets. But I kind of view those things as funnels. Like, and Bitcoin's moving volatility, Ethereum's more volatile, Solana's even more volatile, right? And so
Yeah.
this is where the New Zealand lens of volatility being a negative, I think, just needs to a little bit of a sit down and just kind of, there's good parts to it as well, because volatility can go up and down. And so, having this is the long term lens and having a view to, what exit price or price you'd be happy to exit out of and all that sort of stuff. Having some disciplines around your investment, I think, are really important.
Yeah.
Again, like, I'm not an analyst. I just read their stuff. Some of that excites me because it's just going to mean the market's going to be very busy, very exciting. The dream, and this came through on our recent market research that Easy Crypto's just put out. The dream of a lot of people who are investing in crypto is financial freedom. They're just not able to attain it using more traditional assets, particularly housing. That came through loud and clear. And so, for a relatively small entry price, there's still this access to this asset class, which is secular, is on a cycle, and potentially could change people's lives for the good. And that's the bit that excites me the most as well.
Same here. So on that, and maybe we'll finish on this. We talked a little bit about the technicals and just the patterns that sometimes we see these 4 distinct seasons, and hey, we might be heading into summer and all the rest of it, and maybe this time next year we see some significant price gains. But on the fundamental side, we also are probably, and this is maybe true, you touched on one of the key themes that we have going on around the world, and that's housing. People feeling increasingly quite angsty towards that. And then there is also a problem with inflation in a lot of places. And due to the actions of reserve banks and trying to stamp out that inflation, they've induced recessions, which are, well, it's well and truly biting here in New Zealand. Early stages of that happening in the US with weaker employment data. Inflation may be coming off the boil. It's hard to say too soon. But the sentiment piece is very different this cycle relative to the last cycle, where as soon as it was clear that number go up was the eventual outcome of central bank policies following March 2020, we were away because we kind of see the light at the end of the tunnel, and it was finite. Providing such and such happen, we're going to get this result. This time, a little bit uncertain. We have a lot more geopolitical concerns, especially with war. So how do you think those geopolitical pieces, the change in sentiment, the generational shifts, how do you think all of this can get distilled into just dictating which way the market's going to go for crypto?
Just a simple
Basically
question,
everything,
Code.
Paul. Just take everything you know and
Yeah.
give me the answer.
Everything Code. Oh, look.
Yeah.
So, there's always the potential of a black swan event, and we all got caught by Corona March in the crypto industry, and that's when Bitcoin sort of fell from, I think it was about 8 to whatever it was, 3.5, 4 grand or something like, and that happened in 2 days, right? And so that type of event could happen again, and people should be prepared for that. And there's enough hotspots around the world. The two that always spring to mind are Ukraine and the Middle East, but Sudan. We now got Russian warships in Cuba. Like, there's enough moving.
Yeah.
There's a lot of moving parts, and those are very hard to predict where they're going to go. At a macro level, there are people, and Raoul Paul, we've mentioned him a few times. He seems to be the poster child for it. That argue that the halving isn't the thing that stimulates Bitcoin. If you step back, it's been the US election cycle combined with more money printing, so the global M2 supply, which is just basically a way of saying there's more money sloshing around in the system looking for higher returns, and so risk assets are the major beneficiary of that. Of that money. That trend is looking like we're now gone from the tightening to the easing part of the cycle. The US is still tightening, but at a much lesser rate. We've had 3 economies, so the EU, Denmark, and Canada, all cut their rates recently. So we do look like we're starting to respond to the pain in the markets, the recessionary pain. New Zealand looks like it's a little bit behind, but eventually will come out. I guess that's a long way of saying I don't think crypto's ever operated into a recession, had a bull cycle into a recession. So we're all guessing, but but human behavior is human behavior. And so if we do start seeing price appreciation through supply down or whatever it is, just one part of the market, whether it's the Europeans or the US, suddenly has cheaper interest rates and, more money to invest, then, we will start feeding the machine, and the machine will do its thing. So I think it becomes a question of the quantum, Darcy, not the if. It's just the quantum thing. All of the metrics would seem to indicate, the S&P recovery in the US is largely being driven by 7 companies, right? You really unpick that, like 7 companies, and it's got 500 in it. It's 7 companies driving those returns, and the returns are really good, and S&P's at all-time highs and all that sort of stuff. So the growth in the returns have not been evenly distributed, and there'll be a bunch of good companies in that 493 list remaining who still have yet to benefit from investor sentiment and change and all that sort of stuff. And crypto is probably the same, right? So
Yeah,
I think the time will come. It's just how much and when.
I agree. And maybe in this cycle, if we are like in bull market mode heading into a recession, maybe we might actually see Bitcoin pull away from the others as a safe haven asset if we are in a bull market during a recession. What do you think about that theory?
Yeah, look, certainly that's a narrative that's really persistent, and then there's other narratives like like I said, the 3 or 4% yield. While it's by global standards not particularly attractive now, when interest rates are lower, it becomes a very attractive proposition. And so there's that, and there's lots of different ways to make yield, and you should do your research if you're going to get into that,
Yeah.
by the way. But there are stable coins that are paying out. If it's paying out way more than the US dollar, you should probably find out how that's happening. There could be a lot of rehypothecation or risk involved with that, but they are paying out as well. And so, there are a plethora, or like a really big list of ways that people can participate in the sector, from low risk to fairly high risk, and derive the outcome, which is financial freedom. That's the
Yeah.
everyday investor. You're in it to help educate people on the options, and that's kind of what I'm trying to do as well. And there are ways that people can do that. It doesn't just have to be 1 or 2 coins. It can be investing in the underlying companies themselves. It can be these yield-driven instruments. It can be DeFi. It can be lots of different things. But there's a lot of things in their crypto toolkit who can help people. And the entry price is low, right? You can get in for as low as $100 and start participating in the ecosystem.
Yeah, and I guess we probably should touch on the fact, because you're Chief Commercial Officer at Easy Crypto, New Zealand's most trusted crypto on and off ramp.
Yeah,
You actually have the ability here to create your own portfolio. You don't really need to use an exchange traded fund. Obviously, the technical knowledge is a little bit higher, and there'll be an announcement soon around how Easy Crypto and something that we've worked on together will help you to get educated on how to be your own bank a lot better in this space. But
hmm
we've been talking today about exchange traded funds. These are financialized products. But in the crypto ecosystem, you have these 2 options. You can go down the TradFi path, and that's going to be easier as time goes on, or you can continue to be self custodying your assets. Um,
yeah.
what are you guys seeing at the moment at Easy Crypto in terms of what people are buying? Is I guess my question that I want to finish on. Is it as simple
Right.
as a Bitcoin, Ethereum, Solana, or are you seeing any interesting trends?
Yeah, look, we do see assets pop up and that are kind of low on the cap table list as runs happen. Across enough time, the 2 biggest assets are Bitcoin and Ethereum. Stablecoins are very, very important now in our flows, and we're seeing people and businesses use that for payment and a whole bunch of things like stablecoins. The product market fit of stablecoins is really, really good.
Hmm.
On our platform, we've openly shared that our stablecoin, the New Zealand dollar, NZDD, is a very common asset used in swapping. So people get into crypto, hold the digital dollar, and then swap it for their target coins when prices are hit. We're also seeing, there are some fervent communities in New Zealand. So the Cardano community in New Zealand is very active compared to the rest of the world. Like
Right.
we trade it at volumes that other parts of the world don't. There's been some runs recently on QNT. There's been some runs on Airweave. These are all specific projects solving niche things, but
Yeah.
they're having good news around the world where they're signing up supplier agreements or their supply exchange listings on other places, whatever it is. And
Yeah.
those are, market moving events. So it does have a point in time feel to it. Ripple comes and goes, as its news comes and goes, and
Yeah.
Cardano.
Yeah. Interesting. Okay. All right. Well, we've covered a lot of ground. We've covered everything on my list. Anything that you want to leave our listeners with, Paul, before we finish up?
Oh, look, again, invest wisely. Like, it is an investment, so take a long time horizon and only allocate what you can. The entry price is small, so we think it's a really good place to start. And do your own research. Don't listen to the Uber driver. Have a think about what you're buying and why you're buying it, and don't expect it to double overnight. That's not a great way to invest. Like, have a longer term strategy and have some views around where the price needs to be, and be happy with those views. If you think Bitcoin at 100,000 is a great sell, then sell it and live your life happily after that, regardless if it goes up from there, right? So don't be living in the past as well.
That's great. Great advice. And thank you. Thank you, Easy Crypto, as well, just for sponsoring the show and for all the work that you're doing, helping lift investor education in this space. Super, super important. So thank you very much, Easy Crypto. There's a link in the show notes if anyone wants to sign up to them. And we'll catch you next time. Paul, thanks again.
Thanks again, Darcy, for having me.